Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. So, I talked about this company in the past, and excuse me, guys, my same subscriber that I told you guys is doing articles now on X, and I'll put the link again. When I gave him this company to go and do some research on, this is the same subscriber. I told you guys I cannot say who he is because he might get in trouble with his job. He's an economist. He's also an accountant for a huge firm. That's all I can tell you guys. You can follow him on Twitter and on Reddit. I'll put the links in the comment section. When I gave him this company to go and research, he came back stuttering. And I said, calm down, calm down. What's going on, buddy? He said, I don't know how you found this. He says, I do not know how you found this company. And my reply was, well, that's why they call me Money Making Mitch. No, I'm just kidding, guys. But I like finding little gems like this. He did an incredible in-depth article on it. It's called Cosco Shipping, the geopolitical compounder hiding in plain sight. And you see, I believe this is a great hedge for our portfolio. In fact, I believe tomorrow they pay dividends. So I'll only get about $500 in dividends, but it's still something that I can throw back into the same company or others like Suncar Technology Group, etc., etc. But Costco Shipping isn't just another logistics company. It's a strategic behemoth at the heart of China's global ambitions. Yet today, it trades at a fire sale valuations, with its Hong Kong listed shares priced at a fraction of their intrinsic value and a full 26% discount compared to its mainland air shares. So if you guys were to be interested in buying this stock, he's recommending you buy it in Hong Kong or ADR like I'm doing, which is similar to the Hong Kong shares, instead of buying it in mainland China, because you get a 26% discount compared to if you buy it in mainland China. Thanks for reading. He says, investors are overlooking a titan. Yes, he was so, that's what I'm saying. He called me back stuttering. Investors are overlooking a titan that's not only profitable and dividend paying, huge dividends, but also poised to dominate the next era of global trade. So because it's so hugely discounted, we expect this company not just to continue paying dividends, but to also explode in share price in the future. From automated smart ports to the Arctic shipping corridor that could reshape Eurasian logistics, Costco is underpinned by deep strategic investments in infrastructure as part of China's Belt and Road Initiative. Its unmatched efficiency and scale could drive explosive growth in demand, not just market share, making Costco a rare blend of income, innovation, and geopolitical leverage in a mispriced industry. Why shipping is the smart money's play and retail is missing out? The backbone of global trade is entering a tech-driven growth phase and it's still mispriced. Shipping is a B2B business at the core of global trade. Companies like Costco move goods from manufacturers and retailers through long-term contracts for predictable cash flows. Spot deals to capture high rates during demand spikes. The core unit is the container, and carriers charge per container shipped. Vessels offer global flexibility. Agile operators can redeploy ships anywhere to meet demand or respond to disruptions. Shipbuilding. China now produces over 50% of global shipbuilding output since 2023. Yes, China alone, reinforcing its dominance in maritime infrastructure. Port infrastructure. Smart ports and automated terminals reduce turnaround times and costs, becoming a competitive edge. Intermodal logistics. Containers move seamlessly from ships to trucks and rail, requiring integrated networks and alliances. Fuel and decarbonization, LNG. This is the yummy part. And alternative fuels are reshaping cost structures and compliance with IMO regulations. Shipping in deeply capital and labor-intensive spanning shipbuilding, port logistics, heavy machinery operations, and ongoing vessel servicing, from constructing billion-dollar vessels to coordinating global container flows. The industry relies on vast infrastructure and skilled labor to keep trade moving. Beneath the surface, shipping is becoming a data-driven industry. AI is quietly transforming operations from predictive maintenance and route optimization to automated port logistics and fuel efficiency. Modeling as vehicles, ports, and containers become smarter, the hidden AI play lies in orchestrating this complexity at scale, unlocking cost savings and agility across the supply chain. And I just saw, guys, that San Francisco and certain other countries in Europe and stuff is dropping tariffs on all ships that are using green energy, and Costco has a lot of them. So it's getting very exciting. Shipping unloved and unappreciated over the past decade, investor capital has overwhelmingly rotated into high growth sectors like technology, which is fine, leaving traditional industries such as shipping in the shadows. So the 10-year inflation adjusted performance illustrates this divergence vividly. While QQQ tech heavy Nasdaq has surged over 300% in real terms, the Dow Jones Global Shipping Index has barely moved, hovering near its starting point. This stark underperformance in shares signal that shipping has been systematically ignored by growth-focused investors. Shipping is priced like a dying industry, but the fundamentals tell a different story. Here's why investors should pay attention. Structural pessimism versus reality. The market treats shipping as if it's in a secular decline, but in reality, the industry boasts strong balance sheets, persistent cash flows, high return on capital employed ROCE, high barriers to entry, rapid technological innovation. Historically, extreme valuation compression in shipping has preceded sharp rebounds, especially when global trade normalizes. Listen to that, guys. Supply-demand dynamics tighten, income and optionality. Investors today can lock in double-digit yields. Listen to this. Investors can lock in double-digit yields while retaining upside form. Cyclical recovery, long-term structural shifts, technological innovation, Belt and Road corridors, Arctic routes, regardless of economic cycles. And by the way, China, I just saw a report where China grew its economy over 5% yet again, even with the tariffs. And I spoke about that in past videos. It's because of the Belt and Road Initiative, guys. It's because of BRICS nations. It's because of ASEAN. Regardless of economic cycles, goods must move. Goods must move. Shipping companies generate consistent cash flows from essential trade routes, excuse me, guys, and supercharge earnings during market shocks. For contrarian investors, this disconnect between perception and reality creates a rare opportunity. Buy a cash-rich, strategically vital industry at crisis-level valuations. It's a no-brainer. While the crowd chases momentum elsewhere. Costco's unique valuation industry comparison. Costco trades at a PE of just 3.4, far below its Western peers. Its 14.3% dividend yield is backed by strong cash flows and a disciplined payout policy. So Warren Buffett warned about that. He said, just don't buy into a company because they're paying high dividends. You also have to look as if they have a strong cash flow, which they do. And huge area for growth, targeting a 30 to 50% of net profits annually. Moreover, its market capitalization is trading below book value with an enormous 24 billion in cash, 24 billion US dollars in cash on the balance sheet. Costco has delivered a 30% ROC over the past 5 years, well above its 7% WACC, signaling robust value creation. The valuation gap reflects geopolitical bias and cyclical stigma, not fundamentals. Costco's strategic positioning. Labor lower costs in China, amplified by automation and AI-driven smart ports, cut operational costs by up to 60% per container move using level 4 autonomous trucks. Capital preferential financing as a state-owned enterprise and favorable bond yields reduces borrowing costs As stated in my previous Substack, which I posted on here, guys, I did a video about that. The Chinese bond market yields favorable conditions for Chinese enterprise. Materials and production, China's shipbuilding dominance, 50% global output, and Costco's vertical integration in container manufacturing deliver lower vessel costs, shorter lead times, and superior unit economics. Belt and Road Initiative. Costco has invested 79 billion RMB, which is 11 billion US dollars, in BRI related projects, including 21 overseas terminals. Piraeus, Abu Dhabi, Chansey. These assets secure control over critical trade nodes and enable Costco to offer end-to-end logistics solutions across Asia, Europe, Africa, and Latin America. Arctic route. Trials on the Northern Sea route cut Asia-Europe transit times by up to 40%, 10 days, reducing fuel costs and emissions while bypassing congested and politically sensitive routes. Costco is partnering with Russia to develop ice-class vessels for year-round Arctic operations. Yes. AI-powered smart ports. Costco's deployments of Level 4 autonomous trucks, lot-enabled reefer containers, and blockchain-based green shipping certificates is transforming ports efficiency and ESG credentials. So Costco combines cost leadership with strategic optionality. When we look at the trend, we can see an exponential increase in operating cash flow per share on the horizon. Let me say that again. When we look at the trend, we can see an exponential increase in operating cash flow per share on the horizon. A key indicator of cash generation operating in a capital-intensive environment. Global trade and tariffs, the risk the market overstates. Much of Costco undervaluation stems from Trump-era tariffs on Chinese-operated and Chinese-built ships, for example. But trade wars are cyclical, not permanent. Costco can mitigate tariffs exposure by leveraging its 30% foreign-built fleet, rerouting capacity toward ASEAN, EU, Africa, and Latin America, where demand is growing and tariffs are less punitive. Be fearful when others are greedy, and greedy when others are fearful. The great Warren Buffett. Costco isn't just undervalued, it's misunderstood. Its strategic alignment with China's Belt and Road Initiative, tech-driven transformation, and unmatched global footprint position it for long-term dominance. The market is pricing it like a cyclical commodity stock, but it's not. But beneath the surface, the fundamental tells a different story. Costco is a cornerstone of the next era of global trade and technological revolution. Today, fear clouds perception, and therein lies the opportunity. What do you think? I'd love to hear your thoughts, guys. I truly believe in this company, and when I gave it to this subscriber of mine, like I said, I can't call his name, he came back stuttering because he couldn't believe what I've found. I hope you guys found this video yet again to be informational, inspirational, and motivational. If so, guys, don't forget to hit that thumbs up and hype it. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.